Gold gained momentum on Friday as a result of geopolitical concerns raised by US and UK airstrikes on Houthi insurgency in Yemen. The strikes were intended to deter attacks against Red Sea ships. Gold for February delivery was $32.40 higher at $2,051.60 per ounce. The raids were in response to warnings sent to the Iran-backed militant organization to stop attacking Red Sea ships with drones and missiles, ostensibly in support of Hamas in its struggle with Israel. According to the U.S. Air Force's Central, the strikes targeted 60 targets in Yemen. Gold prices were boosted not just by global tensions but also by U.S. inflation data that was less than expected. According to MarketWatch, the U.S. Core Producer Price Index remained constant last month, contrary to the expected 0.2% increase. Despite a higher-than-expected rise in consumer prices last month, this data supports forecasts of further U.S. interest rate reduction. Despite the disappointing PPI figure, the dollar strengthened, with the ICE dollar index rising 0.1 points to 102.39. Treasury yields have fallen, which is a plus for gold, given its lack of interest. The bullish continuation in the gold USD weekly forecast is clear as the recent price trades within an ascending channel. Moreover, the ongoing tension in the Middle East could trigger the technical outlook above the 2089.11 resistance level.